Hey everybody, it's Pete. Welcome to a new episode of Stocks for Breakfast. It is Monday morning, and last week was not an easy week to trade. So what we're going to discuss today is how to prevent big trading losses. You can't prevent losses. That's a big part of what we do. No matter what you do, you can't avoid them. Certainly there's some options trades that have super high probabilities of following through. But as a trader, we treat trading as a business. And if we treat it as a business, every business has expenses. And if you're a part of the boot camp, you understand that I teach trading losses are a business expense. They're expected, but the key is you have absolute control over how to control them, meaning you are in charge of whether it's a small accepted loss or you let your emotions get into the play and you start taking much bigger losses than are necessary, quite honestly, because you don't recognize the market conditions. And if you're a regular subscriber to the channel, which, by the way, if you find these videos helpful, please do me a favor, click down right now and subscribe to the channel. You'll know that I am super hyper-focused on two things. The first thing is order flow, which is recognizing the smart money, identifying right now whether it's obvious that buying or selling is happening, and that will set up the odds of follow through. That's what sets up much, much easier trades. The second part is reading the tape. And reading the tape is really where we dig into the charts and we start to say, should we be buying now? What are the odds of me making money if I buy now? And how do I time my trades perfectly? Now, that's the core principles of tape reading. But a big part of that, and a big part of that is understanding if you should be trading at all. And I just mentioned before about taking big trading losses and eliminating them. There's also another one that is kind of like a hidden danger inside your trading account, and that's the death by 1,000 cuts, where you put on a trade, and you keep losing money, and you kind of feel like they're acceptable losses because you're doing what you're supposed to be doing. But a lot of those times you shouldn't be in the trade in the first place. Or if it's still a good idea, where we get what might be called conflict, where much higher time frames are still obvious. So let's say maybe the last 3 to 6 months, but the recent price action has changed and clearly changed, which it has. A lot of earnings have been coming out and the price action is not following through very cleanly, if at all. We're finding that we're buying some of these breakouts that pulling back in, both on the daily charts and as a day trader. You're a little frustrated. But here's the key. The better you learn to read the tape, the easier it will be for you to spot, yeah, that's a setup, but I shouldn't be trading right now because this, and this is telling me that it's a bad idea. So you can have good trade scenarios, but a bad trade idea right now. So what do you do in those scenarios, assuming that you learn to recognize them? Well, the first thing you can do is obviously you can choose not to trade. You could say to yourself, none of the stocks that were where those trades were kind of flying off my fingertips, they're not following through now. I'm buying these clean breakouts. I'm buying these clean pauses in my stock, and they go in my favor by 5 cents, and then they reverse. Or I'm buying a breakout on a daily chart, has a big move to the upside for one day, and then comes back in, and I give back all these paper profits. Well, the market conditions have changed. It's not that the signal doesn't work. This is really one of the most frustrating things that newer traders or quite honestly, even experienced traders who really don't think this through. You think that all of a sudden now you need a new strategy. Oh my gosh, my strategy doesn't work anymore. I need to do something different. It's not the strategy. If the strategy has proven that it makes money, it's not the strategy. It's the market conditions and how you're implementing the strategy. So the first part is you could choose to not trade. The second part, which is something I keep pounding on the table in our private community, which, by the way, if you'd like to join us, click down. You'll see a link to see how other traders are doing. It's learning how to work the order. You see, when you have a trade that has conflict, when you have a trade that is obvious, but right now the circumstances have changed, you have a choice that you can trade less shares, less contracts if you're trading options, and learn to work the order and get feedback from the market and make the market prove to you that now this particular time the market is going to follow through. So I'll give you an example of what I mean by this particular time. If the trade matches your strategy, you have to put the trade on, but that doesn't mean you have to go in with full size, because the odds of follow through are still good, but the odds of follow through right away have diminished because the circumstances have changed. I'm going to show you what I mean by circumstances, and these are all the pieces of what we call putting the argument together, building the argument. Because in the room, we have some really good conversations from traders that are new or new to the community and are frustrated, and they're saying, I'm putting on good ideas I don't understand. It's not so much that the idea is not a trade. It's how you manage that trade that makes all the difference in the world. And I'm going to show you what I mean. So we're going to go over to the charts right now, but I want to remind you, if you find these videos helpful, definitely click down and subscribe, because we have good stock picks every day, but more importantly, lessons like this that save you money. Remember, the very first thing you need to learn in trading is how to not lose money so that you're around long enough to learn how to make money. There's no reason to keep refunding your account. There's no reason to trade scared. You have to trade smart. And that's what I'm going to show you right now. I'm going to show you some chart examples of what this looks like. So we're going to head over to the screen. And the first thing we're going to talk about is the actual market. So you can see the SPY here. We've been in this trading range pretty much here since we exploded to the upside. And then the FOMC announcement here kind of put the market into a coma, you might say. It's actually been trading much lighter volume, but I want to talk specifically about last week's trading. So you have 1, 2, 3, 4, 5 days, right? The first day of the week was actually an incredible easy day to trade. We actually had really solid trend days. We broke out of this trading range that we've been looking to get through for a while now, which this is the rally off of the March lows. But then what happened the rest of the week? If you continue to try and trade as aggressively the rest of the week, it would have been a little frustrating, because the next day we had a gap higher and traded lower. The next day we had a open lower and traded higher. So we went from bullish to bearish to bullish again, fluctuating back and forth. Then we had what we call well offered, which is a lower opening, closed lower, lower lows and lower highs. Then we had lower well offered again and traded into a doji. And I call this a melted candle, because the body of the candle opened and closed in the same spot. So when you add up last week and you add up the aggressiveness of what you want to see in the market, you want to see on a breakout the market goes well bid. So you want to see two candles like this where it follows through, the next candle has higher highs, higher lows, and closes on the highs. Well, we did have higher highs and higher lows, but we closed below the open and actually near the low. So we did not see what we wanted to see on a breakout. Then the next day, okay, we did get a decent day where it closed higher, but the volume dropped dramatically. So during the day, we were saying, okay, what are the perfect conditions? The perfect conditions are we have easy, clean chart patterns that are following through. We didn't get it. Thursday, we had a trade lower. Friday, we had a trade lower. So the point that I want to make here is the market conditions did not follow through perfectly. Again, you need to know what you need to see so that you can get in there and size up and trade aggressively. If you don't see that, the conditions weaken. So now we're going to take a look at a couple of other stocks that you might have traded aggressively because you wanted to, versus you should have recognized we were kind of in stop and go traffic and pulled your share size back so that if you had some losing trades, it was on less shares and your risk exposure was lower, so that if they didn't follow through, you did not get hurt as much. And that was a big part of last week. Even on Friday, I carried an overnight position going into the day because I bought Apple at the end of the day, thought it was a really big pullback and it would rally the next day, but it actually opened up against me. So it wasn't a perfect follow through, so I did not add to the position. I was expecting it to open flat and hold that support level and then trade higher, and looking for feedback that buyers came back in. They didn't. So I worked the order and took a small loss on the trade and then traded around it. But even the trading around it, I wasn't trading big size because the conditions weren't perfect. So now we're going to get to Lulu. And you can see the circumstances here breaking out, circumstances here heading into earnings, and the announcement of them buying the company Mirror. So you can see the price action has been very choppy. And we were saying for a long time, this is the right price. The stock is in a box. It needs to get out of this level before you feel comfortable sizing up again. Well, it did finally break out. And this was a massively profitable day for us in the community because it finally met the conditions. But then the conditions changed. The next day, again, we want to see well bid. We want to see something like this, green closing near the highs. We did say well bid. We did see a higher open, but it immediately reversed. So if you're swing trading, you're still holding it because it's holding the breakout, but immediately The conditions change, which means that you should change how you're managing the trade. So you're not adding to the trade because nothing that you want to see is happening other than the fact that you made higher lows. So the next day you want to see, again, and actually, you know what, I'm going to kind of bring this over. So the conditions change there, and I'm actually going to zoom this out so it's easier to see. The conditions change. So what do you want to see the next day? The next day you want to see this. You want to see it reassert itself to say the conditions are still good, that I can either add to this position or confidently hold the share size that I have. Well, what happens next? We get the opposite of what we want to see. So now as a tape reader, you have to say, what I want to see is not happening. We want to see this. We actually see the opposite. We see lower lows, lower highs, and we see what I call a melted candle, which is massive indecision. So again, as a tape reader, you have to say the conditions change. Am I seeing what I want to see? Am I not seeing what I want to see? And that's going to affect how you manage the trade. It's one of the biggest revelations, one of the biggest epiphanies that people in the community have, is that every condition is not the same. Every condition is not just buy and hope it comes back, which, by the way, is a really bad strategy, but a lot of new people have that strategy. We're breaking them out of that right away, which you saw last week. Some trades did not come back. So we did not see what we want to see. So continuing to build that argument, you have to say to yourself, if this happens, then I'm doing this. If this happens, then I'm doing this. You don't see it. And we go to the next candle. You actually see the opposite, again, of what you want to see. As a matter of fact, a very poor situation for your follow-through. So we actually trade higher, but then reverse hard and back into the trading range. So now you have to make a decision. What would make me get out of this trade? So what I tell everybody is it has to trade back into that breakout level and close there on your entry time frame. Got traded below there, but did not close there on this particular time frame. So now we're managing the position again. And then the next candle on Friday closes back below, trades back below, but did not close below. So we're still in the position. But my point is this. We had the breakout on Monday. Conditions were still okay, but they closed on the lows. Then we had poor conditions the following day. We had lower lows, lower highs. So the smart money told you something changed. Then we actually closed near the lows on another false move to the upside. And now we're actually well offered, but not stopped out of the position. So my point is this. I can go over condition after condition after condition, but we need to trade in real time together to do that. Definitely click down and learn what it means to trade with me for the next 30 days. I go over this over and over and over again. People in the community were probably tired of me last week from Tuesday through Friday saying, work your orders, work your orders, work your orders. But what I'm saying, what I mean work your orders, is the conditions of the market. All of that buying pressure that was so obvious a few weeks ago is not as obvious anymore. Earnings are coming out that are changing the picture. We're having major stocks trade lower after earnings, so the follow-through is not there. You can still make money in this market, and there's massive opportunity. We're seeing quite a few points earned in the room on a day-by-day basis, but we're being super particular about how we pick the stocks and super particular about how we're managing those stocks. So you can make a bunch of trades, and if a bunch of them don't follow through, you put the trade on, you get feedback. If it doesn't follow through, because we recognize the conditions change, we have smaller exposure. For the ones that do follow through, those are the ones that we're adding because we get feedback from the market and says, okay, right now this stock is going to follow through, and then we catch that next wave. So as long as you start to understand the difference between chart reading and tape reading, understand putting the pieces together, building an argument, and how that affects how you manage the trade, that's when you really start to elevate yourself, that you're so much more than just somebody who has a trading account, and you start to become somebody who's in control of how your trading account grows. And that's really just the best feeling in the world. So if you take anything out of this, it's recognizing and identifying, are the conditions perfect? And then understanding how to recognize that, and how far away from perfect are we getting? And then how does that influence how you put the trade on? So remember, if you think every trade scenario is the same, that means that you don't have a strategy. And if you have a strategy, then you're only looking at the market and saying, okay, I know what I'm looking for, and how close is it to perfect? If it's pretty good, how does that change how I manage the position? When you start to do this, this is when you really start to feel like you are the reason you're making money. Not because the market just happened to be going up and up and up and up and up, and you couldn't make a mistake, even with really bad timing. This is the market where you really want to learn, because now you're getting your chops tested. And as you get tested and you get that iron-like will to succeed, when you start to put these pieces together, there's no greater feeling in the world than you're the reason that you're making money. So if you find these videos helpful, I'm so happy that I could help you. Definitely click down and subscribe. And if you want to take it a step further and join me for the next 30 days in real time and actually see my entries in the stocks that I pick, click down and learn more about that. Have a great day.